Hello and welcome to Inderes TV. Hexagon released its Q1 result last week, and now I'm in the studio with analyst Pauli Lohi to discuss the company. Hi, Pauli.
Hello, Pia.
So, Hexagon's Q1 growth, it was known that it would be weak because they released a profit warning.
Yes.
But how weak was it, and what was the reasons behind it?
Well, it wasn't super weak. The organic growth was 0, that is below their medium-term average, but it has been quite low recently. Last year was cyclically weak, for example, in the construction industry and also in some automotive manufacturing markets. So it kind of continues at weak level. There were expectations that it could start improving this year, but in the end of Q1 there was significant weakness due to the tariff uncertainty, and it was especially pronounced in Canada and Mexico, which were like the first ones to get the hit from the uncertainty. So good growth in February and then decline in March, and 0 total growth in Q1. So it wasn't a disaster, but they were prepared for better.
Yeah, so it was weaker than and the adjusted EBIT margin also came down. What was the reason behind that?
Well, like I said, they were prepared for better, so they had invested and they had new product launches coming, which causes that you start depreciating the expenses that have occurred when you have invested into the new product, and probably they had hired more people because they thought that the market is improving, and then there was a sudden change in demand in March. So there was kind of combination of many things, but I think that this Q1 weak profitability was a bit of an outlier. That in the rest of the year they can improve from that level.
Yeah, so probably like the main reason was that they were preparing for a better market and it didn't materialize.
Yeah,
that's why.
And they have already seen that the market has improved somewhat in April. So some sectors or segments that declined in March were again growing in April.
Right.
So the market has kind of normalized a bit, but it's hard to say that what's the impact in let's say 12 months or 2 years time from the tariffs.
Yeah. So like you mentioned, the tariffs, they were seen towards the end of Q1 and of course the trade war as well. What are your expectations with these now going forward? How are they possibly going to affect Hexagon?
Well, they gave good transparent comments about the direct impacts of the tariffs. That they said that it's like 50 million euros per quarter if they don't do any mitigating activities, which they can actually do. So they can raise prices or reroute shipping or relocate production, or they can do many things to mitigate the direct impacts of the tariffs. So I'm not really much worried about those. I'm more worried about what it does to the global trade and activity in their customer segments.
Yeah. And then finally, the traditional, what about the valuation and recommendation? Where do we stand?
Well, we are at accumulate recommendation, and the company is trading below their kind of long-term average multiples, which are high, of course, roughly 18 EBIT adjusted has been their kind of normal level in recent years, I would say, but now they are trading around 16. So, and we consider this cheap, not just because it's cheaper than it used to be, but also because they have had a couple of weak years, and I believe that the growth could rebound at some point, and they also have all the time been improving their software sales, and like their recurring revenue has been growing very well. So the profitability, the underlying profitability of this company has improved, I would say, but it's not visible because the cyclical industries are weak currently. So I'm expecting earnings rebound at let's say couple years perspective.
Okay.
And so that's a good kind of long-term buying opportunity, I would say.
Yeah. Okay. Thank you, Pauli.
Thank you.
So a weak Q1 and a good long-term buying opportunity. You can read more in the report at inderes.se.